Hello, this is Ron Brown. It's May 22nd, 2024. In this video, I want to show you my morning routine that I've been sending out for months. I'm not going to be able to do it this summer because I have some other things I need to do, but I want to show you how easy this is to do yourself. Now, if you're not using HDSI, you should be because it's really powerful and it's really the only program I rely upon other than Thinkorswim for placing trades. As usual, any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now, this routine that I'm showing you usually takes me about 5 minutes, and it took me 20 minutes or so to assemble and mark up and send out to everybody, and I just want to show you how you can do it on your own. Now, the way I have this set up is I am using my top-down process views for index and ETF analysis, and I'm on number 1. I'm doing this intraday, but I have the intraday turned off so I can show you what I see at the end of the day, and this is sorted on the raw combo, which is the percentage price change one day. And the first thing that pops out at me is all of these green, or all of the green columns, I should say. This is one day, beginning of the week, 5 days, 21 days, beginning of the year, and the closing daily range. Now, what do you see here? You see an awful lot of green. This tells me instantly that the markets are still strong. Most of them. There were some pullbacks, slight pullbacks yesterday. Here's the Philadelphia Semiconductor Index. It was down 0.3%, but look at these gains over since the beginning of the year and over 21 days. So just a slight pullback. And then I look over here at these columns. This is the days since the 3 crossed the 6 and the days since the volume point of control crossed, and all of these have been in effect for multiple days. Now, I do have a few ETFs in here. I've got some Bitcoin related, since Bitcoin is pretty pervasive anymore. I don't trade it, but I like to see what's happening. But going into taking a closer look here, you can see the utility indexes was up 0.5 the most yesterday, and if I look here, it's been in effect, the 3 over the 6, 23 days, and the VPOC has been 24 days. And as I scroll across here, I can see that over the 21-day period, it's up 8.1%. And then as I scroll further, I can see, looking at the VPA flags, short-term, medium-term, and longer-term, everything is up. I'm sorry, I got those reversed. Long-term, medium, and short. And then the fan is up too. So there's just a lot of strength in this market right now, and it's instantly visible by looking at this scorecard view. Now, of course, I concentrate on the NASDAQ Composite, but there are several other indexes in here that you can look at. Some of them don't have volume, but most of them do. But I'm going to just go down here, locate the NASDAQ Composite, which is up 0.2% yesterday. And you can see since the beginning of the year, it's now up 12.1%. And over 21 days, up 8.9%. If I scroll back over here, all of these VPA trends are up. And if I go all the way to the right, I can see that it is trading at its 52-week high, and it's up 35.6% from its 52-week low. Now, the next thing I'm going to do is bring up the charts that I look at. Now, I just happen to have this chart here right now, just a plain chart, which is in my, I created a new folder called Context Charts, which I'm using for a new video series. If you haven't looked at the videos I've done so far, you should, because I'm kind of taking a different approach, incorporating techniques from a trader named Frank Bunn. I learned a lot from just watching his YouTube videos, and then I'm incorporating VPA and some of the other things that I've learned over the years. But what I do is I go into my charts and I go to the NASDAQ charts. Now, I used to use this one with the ARMS index, but I don't pay much attention to the ARMS index anymore. So I just go down here and I use 1B because it has the AD line in here too. But before I do that, I like to look at this chart here, which I put in a while back. And what it does is it gives me a look at the internals of both the NYSE and the NASDAQ. Now I'm going to bring an arrow up here. And I'll point out what these are. This is, of course, here's volume, and the VPA flags are in here and so on. But this volume has really been excessive, and I've checked it against volume for the NASDAQ Trader, and it seems to be accurate. But let's look at the internals here. The advancing versus declining stocks have turned negative, and they turned negative back here, but you can see there's a lot of variation in here. Pretty close together, but negative yesterday. Now we see the same thing on the NYSE, and then NASDAQ advancing versus declining volume. You can see that the declining volume has surpassed the advancing volume. Same thing on the NYSE. New highs, new lows. You can see the new highs have turned down both on the NASDAQ, on the NYSE. So that's just a quick snapshot of what's happening internally in the two indexes, the NYSE and the NASDAQ. Clear this off and close this, and then I drop down. I'm using chart 1B with the AD line rather than 1. The only difference is this has the AD line and the other one has the ARMS index, which I rarely pay attention to anymore. So this is a chart that I use every day, as you well know if you've been reading what I put out. And most of the information I need is on this chart, but I look at other charts too. I just don't send them out. So let me go through this process quickly. The first thing I do is I hit my alternate I key, scroll down here, get this information visible, and then I'll bring that arrow back up. I start up here, look at the accumulation distribution. It's on A, and then I look over here, volume above average, spreads narrow relative to the other spreads. It closes high. You can see all that right here. The trends are all up, including the random walk calculations and the VPA trends, up, up, up. Then I quickly go down here. I can see that we're trading at a 52-week high, up 35% from the 52-week low, 12.1% since the beginning of the year. These are just warehouse charts, which you can put into a chart. All the information is here. Here's the closing range. The gap was down. You can see the gap was down from the prior day, and it closed strong. The percent closed to the open, 0.62. VPOC's positive. Accumulation, AD in the direction. These are accumulation indicators which determine the letter rank. Bongo weekly, yes. Bongo daily, yes. The velocity has fallen off a little on the accumulation, but not much, not enough to be concerned about. And then I look down here at the volume. You can see that it's trading 23.8% above the 90-day moving average volume. So several strong volume days, and structurally here, this is all positive until today, or up to the current day. Then I look down here. This is what I showed you already in the prior chart, and here's the AD direction. And then see if I can change this to a frame. And then I always outline these for the volume. Look at the pocket pivots, advancing versus declining. These are the actual numbers. And then the new high-lows I look at here too. And you can see that the AD line has gone down some. Now I can't see it clearly on here, so I'm going to run through a couple of other charts. But I've done my market analysis today. What's my conclusion? Still strong until it isn't. But there is some deterioration in the internals. I have to be aware of that. Gonna clear everything off of here. 9 and just drop down to the next charts. Here is the McClellan oscillator. And I'm going to make this full screen. And you can see that the McClellan oscillator has turned down. This is a, well, if you want to know what it is, just select Edit Indicator, and it'll tell you right here. It's a breadth indicator computed from the difference, which is misspelled, of the 19 EMA and the 39-day EMA, of the difference of advancing versus declining issues. This has been around for quite a few years. McClellan developed it, and his son still promotes it, but you can see that it's going down. On when the market started moving up, let me bring that arrow back. I'll just put my crosshair on. You can see right here that the internals were starting to move up a little bit before that bottomed out, and then when it turned around, it started climbing, and now here's a lower high than this high right here. So we're getting a divergence in this. And this green line is the summation index, which doesn't give me much information. I just primarily look at the McClellan oscillator. Okay, so here's your new highs versus new lows. You can see that the new highs have come down. Look at the new lows as this market sold off here. And then as the market rose, we're getting new highs. But even though we're out to a 52-week high, look back here over on this side. We're not anywhere near to these new high numbers. So yes, the market is at a 52-week high, but the new highs, new lows are well down from where they were back here. And then I quickly look at the advanced decline line, which is in the upper window here. We have the fan right here, which shows me that the fan is still up 200, 150, and 18. But the AD line has turned down. And then that's it for the NASDAQ. And then sometimes I run through the NYSE, but primarily I don't. I just look at these charts. Okay, I want to do one more thing before I end this video. I want to talk a little bit about structure and direction. These are, I'm doing this video series on structure and direction, incorporating VPA with the way I look at things, and based upon a course or courses that Frank Bunn had up on Udemy. Well worth looking at. I like his description of price trend changes and confirmed pivots and so on. Let's just take a quick look at the structural changes. Now, the way I'm doing it, and he doesn't do it exactly this way, but I'm going to bring up the annotation tools. And my structure, the way I determine structure, is I look at the relationship of the closing price to the prior day's close. So I'm just going to start up here, and I'm going to use a blue arrow. And structure is the total range of the price for the day, depending on what you're using. If you're using weekly charts, that would be the interval, and daily charts. And I'm going to use daily charts. So let's just start right here. So the interval, or the range for this, is from the low to the high, and the direction is the open to the close. So open to the close is positive. The structure is positive. Here, structure is positive. That's a full length of this to the close, and it looked pretty good. And then the next day, it opened here, traded up a little bit, and closed near the low. So this structure is down. This structure is down. This structure, even though it's a white candle, is down because the close is less than the prior day's close. This structure is down. This structure is down. All these closes are lower. And then here, this is the structure, the range, and the direction down. Now here we have a white candle with long legs. So this structure is positive because it's greater. The close here is greater than this close. Positive structure with the close being greater than this close. This structure is classified as positive. Why? Even though the direction is down, because the close is greater than the prior day's close. So I make this one, and this is just the way I do it. I consider this a positive structure. And then what happens the next day? Big sell-off, but it's not a positive structure because I need to get rid of that one. I consider it a negative structure because this close is lower than this close. So it's just a one-day reaction so far, but then the following day, this gaps up, and the structure is positive, and the direction is positive. This was a wild period in here, if you remember. Nobody had a clue what direction the market was going. But structurally, this is positive, even though it's red because the close is higher than this close here. And then we have a reversal here. Negative structure because the close is well below this one. And you can see this bar goes all the way up here. Negative structure again. And then this is followed by a positive structure and a positive direction because it's a white candle. Let's move up to this one. This is a positive structure and positive direction. Same here. This is a negative. Structure is negative. I have to redo that one. Direction is down slightly. Positive structure, slightly negative because the close is less than the open. Need to drag this all the way down here. And then what do we have here? This is pretty much well, no, this is a positive close because its close is greater than the close down here. Then a positive close, positive structure, positive close on both of these, and then slightly negative structure, and then the last 2 days have been positive structure. Now for this to change direction, for the market to change direction, we would have to see a third lower low compared to the prior candle or a pivot trend change. And I just don't see it yet. The structure of the market from this point on, right here especially, because this is pretty hard to determine anything here, but from here on you can see that the structure has remained positive, and we're seeing that continue to today. Now this is the same chart over here. You can see there was an effort to rise right here. This is a test here, confirmation of the test. Effort to fall, just really no structure at all to determine, or the structure was loose to say. It would be an understatement. But once it's gapped up here, we've seen nothing but structurally higher highs and higher lows. And as I'm doing this, it's about midday today, and it looks like the comp is flat right now. So just not seeing a lot of selling yet. So what do we have? We have a NASDAQ, a chart with positive structure with some weakening internals. It's just too early to say that this market is rolling over. It's just not a real broad market, as you saw from the new high lows and from the advanced decline line and from the McClellan oscillator. So in summary, I would say it's a cautious market. You have to be cautious. I've got a few positions on, but I'm not going crazy. They were doing much better yesterday. They pulled back today, but I've been really trying to follow the structure and the direction of the market, basing my decisions on that rather than just looking at indicators which are lagging. It makes more sense for me to go directly to the candles to determine what's going on. Now let's just do one more thing here. Let's change this to the weekly chart, and then structurally, look how strong this market looks. All of this garbage in here fit into this weekly bar, and then this choppiness here fits into the white candle here and this one right here. And if we look at weekly charts, the trading is much less emotional. I know a lot of things can happen in a week, but I think it's always good to look at the structure of the market and the direction based upon both the daily and weekly charts. And I'm going to end it here. Once again, thanks for following my daily updates. I may get back to it, but like I said earlier, I've got some things I want to accomplish and deal with this summer. Have a good summer, and I'll be around and I'll be posting things, but I just won't be doing the daily updates.